Good morning, Paul Georgie from Allendale. It's September 17th, 2010. We got the markets pretty excited here this morning, or at least overnight. The big question is going to be, where do we go here today? Overnight, we had tremendous amount of money flow into commodity markets. Corn market up sharply, went all the way up to $5.13 or $5.11.5 here overnight. A lot of buying coming into this thing from around the world. We've seen the early trade jump above the $5 level, and then about 3 a.m. this morning, a huge amount of money came in from Europe. Once it woke up, we were higher in the grains, in the livestock, in the metals, in cotton. All markets were higher. Macro buying across the board in commodities here this morning. Gold up another $8 as well. So all this surged the market here between about 3 and 5 a.m. Then we kind of settled back, and at the close at 7:15 here this morning on the grains, things settled off their highs about 5 cents. Big question is, where are we going to open here this morning? Talking to some of the floor trade, they're calling corn 9 to 11 higher, beans 14 to 16 higher, wheat 10 to 14 higher. But the question is, really, where are we going to go? Are we going to get follow through? Has all the buying moved into this market that was the nervousness, the anticipation of corn yields, the psychology about crop damage around the world? All those factors are emotional factors to help support this market. But the big question is where we end up here today, and that's going to be causing a lot of volatility in our trading session here today. We should have support now in the corn market around the $5 area on setbacks. We expect this market to be well supported on any kind of breaks, but there always is that day where you have a tremendous amount of buying early in the session and then profit taking toward the end of the session. There may be and should be some hedge pressure here later on, because harvest will be continuing here this weekend. So that may weigh on the market a little bit near the close today. The other news that we can talk about, corn yields continue to be a factor. Those yields continue to get less and less as far as trade averages and being talked about anyway. Field averages are getting better in the further you move north, but in many cases less than last year. So a real tug of war there with the emotion and the ideas that corn yields and the USDA numbers coming out in October are going to be less than they were here in the September report. We've got chart resistance at around 513 in the December contract of corn. If we take that out, next level will be around the 522 to 525 area. Soybeans, not much news there. Certainly the news is not bullish. Soybean yields continue to be large, and yields that harvest is just beginning here in the northern part of the Corn Belt. We're hearing yields in the 70s for soybeans, and even in the upper 70s in some cases. So bean yields are big, but it's being very quiet and not talked about very much. But the market's being driven technically and emotionally. Today you've got to watch some critical numbers, 1057 in the November contract. If we close above that, we could get a lot more stops hit and potentially take us up to that $11 area. But this 1057 area is a key area to watch today in the November soybeans. Wheat market news there. Canada had a frost last night, and the western plains have had the growing season end last night. They had lows in the 20s for a period of time. Also some frost in China here overnight that is providing some support there, but we were far enough along in the growing season. I don't think the damage was extremely significant, but certainly any kind of a loss right now is important, especially when you've got as much emotion in the market as we do in the grain markets currently. So look for the grains to trade higher today, open higher anyway. Don't really see any reason why they should sell off, but you always got to manage risk in this type of volatility. In the cattle market, we got cattle on feed report out this afternoon. On feed at 101, placed at 99.4, and marketed at 106.2 is the trade averages. The cash market did trade late yesterday at 98 in the south, 154 in the north. The cattle, the packers had to come to the feedlot finally and pay up. Futures markets are stronger here overnight. We went right up against resistance levels, took those out. Next level of resistance, the October cattle, is $100. We still got support around that low of yesterday at $97. Cutout values were lower for the product in the beef yesterday. In the hog market, again, buying came in this morning, added all back what we lost yesterday. That loss yesterday came off of some news that Russia had ceased buying pork from 2 U.S. plants. That in turn caused the sell-off in the futures, but we've added that back on because this demand certainly can be met by other packing plants in the area. So look for livestock markets to stay strong as well. They're right up against some resistance levels, so they further moves higher from here should be a little difficult, at least initially, but the trend still is up in both cattle and hogs, and trade the trend, as we say in our office. So if you got any questions, give us a call here at Allendale at 800-262-7538. We know there's a lot of volatility here today, and you need to discuss your positions or strategies. We'll be happy to do that. We wish you a very successful trading day. We'll talk to you on Monday morning. Thank you.